please welcome to the stage Politico's Jasper Goodman, Brendan Bordelon, Katherine Hapgood, and Michael Stratford.
Hi, everyone. Thank you all so much for being here. My name is Jasper Goodman, and I'm a financial services and economic policy reporter at Politico. And I'm excited to be joined today by some of my colleagues who cover small business policy, tech policy, and financial policy to discuss the current Washington landscape that small businesses are dealing with. So, Brendan, you cover tech policy for us at Politico, and I want to start with you. I think probably many people here today, and really businesses of all shapes and sizes, are thinking about AI, how to incorporate AI into their product and into their business model. How should those firms that don't have a big Washington presence, a big lobbying arm, be thinking about the current regulatory environment around AI? How should they be thinking about the Republican Congress and the Trump administration and how they're approaching AI, and what effects might that have on their business?
Sure. So I think in 2025, the operative adjective for DC and AI is probably hands-off. We are a very far way away from 2023 when Senator Chuck Schumer and other lawmakers were gathering together regularly to discuss how or whether to regulate this technology. I think with the new administration, that ship has largely sailed, and now it's just like brakes off, full speed ahead. What can we do to facilitate the development of this technology? What can we do to spread it across the economy? There is still some regulatory efforts in the states, and I'm going to get to that in a second, but at the federal level, it's just go, go, go. Let's build this technology. Let's build this stuff. A lot of that's driven by actually the folks in the White House, the tech folks in the White House. There's a lot of venture capitalists that came from Silicon Valley to join the administration. They are driving this at the Office of Science and Tech Policy. They are really driving it across the board, and Congress is listening to the president on this. They're sort of following his cues. So what we're seeing in terms of White House action, in July they released what they're calling the AI Action Plan. The main focus there is really around, again, developing this technology. A big focus is energy. The data centers that power this technology, they are incredibly energy intensive, just like hoover up massive amounts of electricity. So a lot of the focus is on that. There is also a focus on adoption, which is, I think, where the small business community is probably more interested. There's a couple shout outs to small businesses in the AI Action Plan. I think the main thing, they're hoping to use money from the Small Business Innovation Research Program to look at ways to integrate AI into small business manufacturing, other small businesses that are looking to deploy this new technology. And then on the Hill, there has been, again, like I said, Republicans in Congress are mostly just sort of following the president's lead on this. The main focus there has probably been on state laws and what Congress can do to preempt state laws. This is a long-running theme in tech policy. If any folks who have small businesses and have dealt with privacy laws, there is no federal privacy law, but there's a bunch of state privacy laws, and I think small businesses especially struggle with that when the laws conflict. The big businesses have armies of lawyers. They can sort of work out how the California law differs from the Utah law and the Colorado law. We're now seeing that crop up in artificial intelligence as well. Some AI laws are coming down the pike at the state level, and there is no federal law that preempts those. So there was a provision in the One Big Beautiful bill that would have put a 10-year moratorium on state AI laws. It almost made it through, and then at the very last minute was stripped out, I think 99-1, actually.
With quite a bit of drama and fanfare.
Yeah, right at the last second. Actually, I think Senator Blackburn switched on the whole issue. I was on paternity leave at the time, actually, so I was not covering this, but I was watching it very carefully. And that continues to be a big area of interest for Congress. I don't think that issue is dead by any means. There's probably some horse trading that's going to need to go on behind the scenes there. That is still largely being driven by the White House. The AI Action Plan had a very big state preemption section that I think Congress is looking at there. So I would expect to see that continue, efforts to sort of make some sort of state law there. And then in terms of just sort of other federal areas of interest when it comes to small business. The Small Business Administration does actually have some advice for small companies that are looking to use AI. I was actually looking at a web page earlier today, and it said, AI is relatively new, so be sure to start small. And I think that's sort of an important thing for government to be saying, because you could see how a small business could maybe like overinvest in AI tools, thinking it's gonna, there's a lot of hype out there right now. So I think folks think like, hey, it's gonna save me all this time and money, and maybe I don't need to hire these people. And then you end up, struggling to figure out how to integrate it. There's a US Census Bureau report that came out recently that showed at large companies, AI adoption is actually declining. A lot of workers are sort of struggling to figure out where the technology fits in to what they want to do, what they're supposed to do for work. So I think you might see that even more crop up even more at smaller companies, just given the fact that like there's a lot less pressure than you're getting from these big companies to integrate AI into their products. Other than driving the stock market, which I think you certainly see a lot of AI investment there, this is a relatively new technology. I think the government is certainly looking to develop it and move as quick as possible. But I think especially where small businesses is concerned, I think it's behooves everyone to be a little bit cautious and maybe move slowly when it comes to integrating it into your products and your services. So I think that's where we are right now, and we'll sort of see where the regulatory landscape goes from here. But yeah, small businesses are definitely a key part of this conversation, and I think going to become more so as things keep develop.
You mentioned the SBA. It's a big, important part of the regulatory landscape for small businesses in Washington. Katherine, you cover the SBA for us. Talk about what the approach of the Trump SBA has been thus far. What is Kelly Loeffler, the SBA administrator's agenda look like? And how would you say that the approach of the current SBA differs from the way things were under the Biden administration?
Yeah, so there's a couple of things. One is there's been a huge emphasis in bringing U.S. manufacturing back to the mainland, which we've seen in numerous ways in tandem with the Hill as well, led by congressional Republicans, whether it be Roger Williams leading the House Small Business Committee or Senator Joni Ernst leading the Senate Small Business Committee. We've seen the Made in America Manufacturing Finance Act. This would increase loan limits for small manufacturers to $10 million from $5.5 million. So we've seen that, and Administrator Loeffler has spoken out in support of that with both Senator Ernst and Representative Williams. And we've also seen, too, a change in rules that would re-implement guarantee fees, but this exempted small manufacturers. And then outside of that, there's been a pretty big emphasis on loans, loan volume, loan amount. And then through that as well, an emphasis on tougher standards for loans. And a lot of this is re-implementations from before the Biden administration, whether that be re-implementing lender fees, except for those small manufacturers, and then re-implementing stricter pre-pandemic underwriting standards. And then through this, too, we've seen some impact on the number of loans because of those policy changes. And then outside of that as well, there's an implementation of a new policy rule where all small business owners applying for SBA loans, whether that be 7A or 504, must be U.S. citizens or permanent residents of the U.S. with green cards. So we've seen that. And then outside of that, too, Administrator Loeffler's made a big push for a leaner SBA. And we've seen this, too, across the government. Specifically, she had mentioned cutting the SBA by 45% from the SBA's furlough plans that were released, I guess, a couple of weeks ago now. But the SBA has been down 35%. So they've cut some of these employees, and a lot of these folks were at least what the SBA said, were from PPP or from other pandemic programs that they've tried to cut.
Awesome. I want to shift gears a little bit and talk about some other players in the small business and in the financial services and fintech space. Michael, you cover financial regulation at Politico, and in large part, your coverage has focused since Trump returned to power on the administration's deregulatory agenda. And this, I want to talk to you about how this has played out in the fintech space, because there's been a big fight in Washington over how the government should regulate and approach financial data sharing. Can you talk about how this is playing out in the Trump administration? This is something that has a lot of importance to players in the fintech and crypto space, who I know might be here today.
Yeah, sure. It's an interesting issue because, broadly speaking, when you talk about the Trump administration's deregulatory agenda for financial services, it's pretty predictable and certain. The Trump administration has made clear they want to scale back regulations on banks, other players in the financial world, and that's been happening. Trump-appointed regulators have been, advancing that agenda pretty clearly. The open banking rule at the CFPB has been sort of an interesting exception because the Trump administration earlier this year sort of made a sharp turn in terms of what they were initially planning to do, which was siding with the largest lenders, the biggest banks, in trying to completely get rid of the rule. And siding against the fintech companies that are big proponents of this rule. And the rule is, it's called Section 1033 of the Dodd-Frank Act, which, broadly speaking, commands the CFPB to regulate, as you said, consumer data and gives consumers a right of access to their data. What the Biden CFPB did was create an entire regulatory regime based on that section of the law that had a lot of components about privacy, data security, what different players can do with the data that flows through this really complicated ecosystem of insured bank to data aggregator, middleman, to fintech firm, and increasingly to crypto firms. And that's sort of the reason this became a big issue earlier this year. As you know, Jasper, since you cover crypto so closely, crypto sort of crashed this long-running debate over how to approach this issue that was raging for years between banks and fintech firms. And I think small businesses are, in some cases, on both sides of this because they are, in some cases, the providers of this personal financial data into the ecosystem and also the users of that data. And the main dispute between banks and fintechs that's been animating a lot of this is whether banks can charge for access to data. And that basically means, like, will the JP Morgans of the world be able to charge data middlemen like Plaid for access to their data that then flows through to any number of fintech apps, your digital wallet, your crypto wallet, budgeting apps, a whole range of companies. And so after initially siding with the banks, there was a lot of lobbying from the crypto world, and the crypto world sort of formed this alliance with a lot of the fintech companies and merchants that are on the fintech side of this ledger, and successfully got the administration to change course. So what the Trump CFPB did was say, we're going to reconsider this rule instead of gutting it altogether, and they're in the process of doing that. I think public comments close on Monday, and the administration has promised a draft of a rule, or has signaled a draft of a rule by the end of this year. And it's a really interesting dynamic because there's not a clear, in one way, like, is a really interesting illustration of the ascendance of the crypto lobby, that they're able to just totally scramble what seemed like predictable politics that the Trump CFPB, as it is doing in so many other areas, wants to lay off the institutions regulated by the CFPB. But this is sort of an actual area of policy making and debate in an otherwise agency that the administration wants to close down. Relatedly, there's another issue at the CFPB that I know has garnered the attention of small businesses, which is narrowing the scope of which companies in different consumer markets are supervised by the CFPB, and no one wants to be supervised. It means that a federal agency is coming in and checking in on you. It doesn't actually change your legal obligations, but you have a constant relationship with a regulator who's supervising you. So there's been an effort across a lot of different areas at the CFPB to narrow the scope of that supervision. And in particular, the CFPB is looking at changing the thresholds for some of these markets, which has a significant impact on small businesses if you're around that threshold, and they're figuring out what those thresholds look like. For example, in the auto lending market, the consumer credit reporting market, international money transmitters. So that's something we're also watching to see how it plays out. There's not a clear answer exactly where the Trump administration is going to land, and there's sort of interesting lobbying on both sides of those markets, because obviously larger participants want to see the threshold as high as possible, and also banks, which are the competitors in a lot of cases to these non-bank lenders who want to see supervision of their competitors.
Definitely an area where there's been some super interesting lobbying dynamics play out in the current Washington landscape. Michael, I want to stay with you for a minute to ask about another big focus in the financial regulatory space, which is an issue called debanking. And this has been something that the SBA has taken a role in the Trump administration. Kelly Loeffler, the administrator, has talked about it quite a bit. You've covered the debanking debate and the Trump administration executive order on debanking. So let's just start, for people who might not know, what is debanking and why does it matter in the small business space? Why is this something that the SBA cares about now?
Yeah, debanking is this sort of a little bit of an amorphous concept. Generally, it's the idea that a bank is refusing to do business or closing the account of a customer. And I think of it as sort of two different worlds or two different areas where we are seeing this, or at least it's being debated. There's certainly an active debate about the extent to which it is happening. But there's the debanking that the crypto industry has railed against and has blamed Biden-era regulators for issuing guidance and taking steps to prevent crypto firms from accessing the regulated banking space. That in a lot.
And then just to clarify, that means having a bank account, right? Having a checking account at JP Morgan, a basic service. So that's what we're talking about here, is not having access to basic banking services.
Right. And so that's largely being fixed by the pro-crypto Trump regulators who are rescinding a lot of those Biden-era policies. Then there's another category of debanking that has been raised by a lot of conservative groups, some religious rights groups, energy companies, and sort of gun manufacturers, sort of conservative-aligned industries who claim that they've been systemically discriminated against by by big banks. And the president has talked about this himself and has said he's personally been the victim of debanking from big banks that didn't want to do business with him after he left office.
I think I was at an event at this very stage a few months ago where Trump's kids, who are now in the crypto business, said that it was one of the motivating factors that led them to get into crypto was their experience in the banking world in the run-up to the 2024 election.
Right. And so Trump earlier this year signed an executive order trying to crack down on these practices. And some of the solutions are being welcomed by banks. There's a concept called reputation risk, where bank regulators were able to incorporate a reputational risk that a customer might pose, and that's what both some of the banks and people who've been debanked claim was a motivating factor or an issue there. And then the other sort of bigger issue or thing that we're still watching and we don't know exactly how it will play out is Trump ordered financial regulators to do a retrospective review of cases of debanking at individual banks. And the prudential regulators are working on ways to implement that order and sort of shuffling around resources to get bank examiners looking at those individualized cases. And I know the SBA, I think was maybe the first out of the gate in sending letters to SBA lenders asking them to go back and review their records to see if there are cases where they debanked people. I know I've heard from a lot of banks and financial industry people who are really unclear about exactly what the contours of these retrospective reviews are going to look like. They haven't been, there's not a start date, so they theoretically could go back into the beginning of time. And there's not clear guidance yet on exactly what banks of any size will be required to produce to regulators to substantiate the account closure decisions or any type of account decisions that they made. So that the deadlines for those reviews haven't hit yet. So we're going to be following that in the months to come.
Fascinating. Brendan, I want to close by looking towards the future a little bit and come back to you in our final couple minutes here. You know, we've talked a lot about the Republican regulatory landscape. We've spent a lot of today thinking about AI, how AI impacts small businesses. There's a world past the next election when Democrats could come to power again in Washington. I just want to, close by asking, how do you think the landscape might change in a future Washington in which Democrats have more power and more control over some of the AI policies that we've been talking about?
Sure. Yeah, it's a great question. I think, look, excitement about AI is bipartisan. I think folks on both sides of the aisle have a lot of hope about what this is going to do for the economy. I saw a headline recently, I forget what outlet it was, but it was like, the U.S. is basically one big bet on AI now, right? I mean, like all businesses have plowed money into this. So Democrats are going to proceed very carefully. I do think that there is going to be more of an appetite to regulate than we are seeing certainly from this administration and from this Congress, because again, it's just, pedal to the metal, full throttle here. And there was a lot of concern raised about, I think, risks when it comes to AI, both at sort of the existential level and also at the more sort of like mundane, day-to-day level when it comes to privacy, when it comes to discrimination, when it comes to bias. These are concerns that you heard from Democrats in previous cycles. I think you are continuing to hear that from Democrats to a certain extent. Obviously, they're not in charge, so it's not getting a lot of play. I do think that those topics are going to come back. Another area where I think you're going to see a lot more action is related to the international situation. So this is when it comes to sort of the race for AI. There's been a lot of bipartisan effort in that front when it comes to making sure that the U.S. is beating China, right? Can we slow China down on, by stopping them from buying advanced microchips from U.S. companies? That has also taken a little bit of a backslide with the Trump administration. They're very close to some of the microchip manufacturers, some of the microchip developers, thinking of NVIDIA in particular here. You could see a resurgence in those kinds of conversations. And all of that will have an impact on small businesses, right? I mean, the more that there is a regulatory effort or a national security effort to slow or to be a little more cautious around AI, I do think you're going to see that impact how small businesses pick up this technology, integrate it, and so stay tuned. We'll see where Congress goes, but certainly I think a little bit more of a heavier touch on AI if the Democrats take back the House or the Senate.
All right, Brendan, Katherine, and Michael, thank you so much, and thank you to everyone who's here today. Thanks.
Thanks.